Good day to everyone. Today we're diving into a topic that could be helpful to many, the 7-step guide to getting a personal loan. You might be wondering, what exactly is a personal loan? Well, it's a form of consumer lending that offers flexibility and accessibility. Whether it's for a home renovation, debt consolidation, or an unforeseen emergency, personal loans can provide the financial assistance you need. Over the course of this video, we'll be exploring 7 key steps to securing one. We'll start with checking your credit score, then move on to calculating the loan amount and pre-qualifying with multiple lenders. We'll also discuss evaluating loan offers, applying for the loan, receiving approval and disbursement, and finally repaying the loan. Each step is crucial in ensuring you get the most suitable loan for your needs. Ready to demystify the process? Let's dive into the first step. But before we dive in, if your goal is financial freedom, do check out our video, What is Financial Freedom and How to Achieve It? It's packed with value and comes with a complete article on how to go about becoming financially free. Now back to the topic. Step 1 is all about understanding your credit score. Now, why is your credit score so crucial? Well, it's like a financial report card. Lenders use it to gauge how reliable you are at paying back debts. A good credit score can open the door to better terms and lower interest rates when you apply for a loan. So, how does one find out their credit score? There are several ways. Many credit card issuers provide free credit score access to their customers. You can also use a credit monitoring service, which often offers a free trial. And every year, you're entitled to a free credit report from each of the 3 major credit bureaus, namely Experian, Equifax, and TransUnion. Remember, knowledge is power. Understanding your credit score gives you an idea of what to expect when you apply for a loan. It's like peeking into the future, giving you a chance to improve your financial standing before taking the next step. Once you've got your credit score, it's time to move on to the next step. Step 2 involves some number crunching, calculating the loan amount. This calculation is crucial for budgeting and planning your repayment strategy. Start by determining the exact amount you need, excluding any fees. Then, add any additional fees associated with the loan, such as origination fees, which are often a percentage of the loan amount. Now let's consider the repayment plan. Estimating your monthly repayments can help you understand whether the loan is affordable for you. To do this, you'll need to factor in the interest rate and the loan term. A longer term means smaller monthly payments, but you'll end up paying more in interest over time. Conversely, a shorter term results in larger monthly payments, but less interest paid overall. Also, remember to consider your monthly income and expenses to ensure you can comfortably afford the repayments. It's not just about getting the loan, it's about repaying it without straining your finances. And voila! With these calculations in hand, you now have a clear picture of the loan amount and the estimated monthly repayments. With your calculations done, you're ready for the third step. The third step is to pre-qualify with multiple lenders. Now, what does pre-qualifying mean? It's a preliminary step in the loan application process where lenders perform a soft check on your credit score. This gives them an idea of your creditworthiness without leaving a mark on your credit report. It's like window shopping for loans, where you get an estimate of the loan amount, interest rates, and terms you might qualify for, all without affecting your credit score. But why should you pre-qualify with multiple lenders? Well, it's all about comparison shopping. Just like you'd shop around for the best price on a new car or gadget, it's important to do the same with your loan. Different lenders may offer different terms, so pre-qualifying with several allows you to compare and find the best deal. Remember, the goal here is to secure a loan that fits comfortably within your budget and meets your financial needs. Now that you've pre-qualified, it's time to dive into the details of your loan offers. Step 4 is all about evaluating your loan offers. Now, this is the moment when the rubber meets the road. You've got these offers in your hand and it's time to put them under the microscope. Start by looking at the repayment terms. How long do you have to pay back the loan? A longer term might mean smaller monthly payments, but it could also mean you'll end up paying more in interest over time. Next, take a peek at the fees. Some lenders might try to sneak in origination fees, late fees, or prepayment penalties. Be sure you understand what you're signing up for. And of course, there's the interest rate. This is the cost of borrowing the money, and it can make a big difference in how much you end up paying back. Look for the annual percentage rate, or APR. It includes both the interest rate and any fees, giving you a clearer picture of the total cost of the loan. Remember, it's not just about finding the lowest rate or the longest term. It's about finding the right balance for your needs and your budget. So take your time, do your homework, and watch out for any hidden costs. Once you've chosen the most suitable offer, you're ready to apply. The fifth step is where things get real, applying for the loan. Now, this isn't as daunting as it might sound. It's all about gathering the right documents and understanding the timeline. So, let's dive right in. First things first, you need to gather all the necessary documents. These usually include your proof of identity, like a passport or driver's license, proof of income, such as pay stubs or tax returns, and proof of residence. You may also need to provide recent bank statements. Keep in mind, each lender might have slightly different requirements, so it's always a good idea to check with them beforehand. Now let's talk about the application itself. This typically involves filling out a form with your personal information, employment details, and the amount of loan you're seeking. Be sure you've done your homework and know exactly how much you need. And remember, honesty is key. Providing accurate and truthful information is crucial, as any inaccuracies can lead to delays or even rejection of your application. Once you've filled out the application and attached all necessary documents, it's time to submit it. This can usually be done online or at a physical branch, depending on the lender. Now comes the part that requires a bit of patience, the approval process. This can take anywhere from a few hours to a few weeks, depending on the lender and your individual circumstances. During this time, the lender will review your application, check your credit score, and assess your ability to repay the loan. It's important to remember that applying for a loan is a serious commitment. You're essentially promising to pay back the borrowed amount, plus interest, within a certain time frame. So make sure you're fully aware of the terms and conditions before you sign on the dotted line. After submitting your application, it's time to wait for the response. Patience is key here, as rushing the process won't do you any good. Instead, use this time to prepare for the next steps, receiving approval and disbursement of the loan. And remember, every step you take brings you closer to achieving your financial goals. Step 6 involves receiving approval and disbursement of your loan. Once you've applied, you're in a period of anticipation as your lender reviews your application. The duration of this review process can vary, so patience is key. Upon approval, you'll receive official notification and the loan agreement to sign. Now let's talk about disbursement. This is the moment when the lender releases the funds. Typically, the loan amount is directly deposited into your bank account. However, it may take a few days for the funds to become available, so plan accordingly. But what if your application is rejected? Don't despair. Understanding the reasons for the rejection can be a valuable learning experience. It allows you to rectify any issues before applying again. You might need to improve your credit score, adjust the loan amount, or even consider a different lender. With the loan amount in your bank, you're almost at the finish line. The seventh and final step is repaying the loan. Now this is where the rubber meets the road. Timely repayments are crucial when it comes to personal loans. They protect your credit score and help you to maintain a good relationship with your lender. To manage your repayments effectively, consider setting up automatic payments. This ensures that you never miss a payment due date and keeps you on the right track. You could also set reminders or mark your calendar, so you're always aware of when the next payment is due. But what happens if you default on a loan? Well, it's not a pleasant scenario. Defaulting could lead to a drop in your credit score, higher interest rates in the future, and even legal action. It's a situation best avoided. If you're struggling with repayments, reach out to your lender. They may be able to work out a modified payment plan. And with that, you've successfully navigated the process of getting a personal loan. And there you have it, a 7-step guide to getting a personal loan. We kicked off by checking your credit score, the gatekeeper to your loan terms, and interest rates. Then we delved into calculating your loan amount, making sure to factor in fees and estimate monthly payments. We explored the benefits of pre-qualifying with multiple lenders, comparing loan offers without impacting your credit score. Next, we evaluated loan offers, considering repayment terms, fees, and interest rates. We then navigated the process of applying for the loan, followed by the exhilarating moment of receiving approval and disbursement. Finally, we discussed the importance of repaying the loan, a step as crucial as any other. Each step is a cog in the wheel of securing a personal loan. If any of these steps felt complex, feel free to revisit them in the video. The more you understand, the better prepared you'll be. We have put together more on the topic in a complete, detailed article. We'll leave a link to that information in the description box below. Thank you for joining us on this detailed journey. If you have any further questions, please comment below. And don't forget to subscribe for more videos like this one. Check out this video next.